All right, Gallup, New Mexico. So we are on to part two of the home buyer workshop we had back on June 1st up at our office. And just to recap, guys, we were talking in part one about the general criteria that lenders are looking for. That way, we're pushing out good information and people aren't automatically disqualifying themselves when they should be owning a house instead of renting. Today, we're going to be talking more about different types of loan products. Now, I want you guys to understand, I am not personally a lender. Some of this information has changed a little bit or what have you. I'm doing the best I can. I want you guys to know if you want to talk to a great lender, give us a call. We'll get you in touch with some of our preferred lenders. That way they can take very good care of you and get you all the updated information. But before we jump into that, we're on part two of our three-part series of the home buyer workshop from June 1st, 2019. And so let's jump into why home ownership. Why is it important? And I know this is a repeat from part one, but generally, guys, when we're talking about home ownership, we always hear about the financial benefits of home ownership. And let's talk about that really quickly. Home ownership allows you to build wealth. You have a highly leveraged investment that actually gains value much, much faster than what you put into it. Secondly, you have tax benefits, which allows you to keep more of your money. Guys, I used to be in the military. I used to work for the government. I love the United States of America, but when you give the government your money, they misuse it. So tax benefits help you keep more of your money in your pocket. For savings account, guys, what's beautiful about this is if you're a renter, you know that you're getting 3% annual rental increases. When you have a mortgage, that doesn't happen. You have a mortgage, your mortgage is the same for 30 years. What's also great, guys, if you rented somewhere for 30 years, guess what? You're still going to be renting 30 years from now. However, when you have a mortgage, after you make that 30 year of payments, guess what? You own it free and clear. You don't have to rent anymore. You can live without a house payment. Let's talk about the social benefits of home ownership. And this comes from the National Association of Realtors. They came out with a report about a year or two ago. Beyond financial, what are the social benefits of home ownership? How about this for your family? Kids of homeowners graduate high school at a much higher rate than kids with renters. Kids of homeowners attend college at a much higher rate than those of renters. So just keep in mind, guys, they kind of tied this into kids get better grades, and it also, because the kids felt more secure in their environments and stuff, it was their home. Civic participation, just so you guys know, homeowner areas with high home ownership rates have lower crime than areas of high rental rates. We also found through this report that a homeowner is more likely to be engaged in the political process and voting and such like that, particularly in local elections for like city mayors, councilors, and who's on the school board, that type of stuff. Well, let's jump on in. All right. So we're going to be covering part two of our three-part series, loan types from the homebuyer workshop that happened here on June 1st. And so, guys, what are the different types of loans and how much does each loan need on a down payment, and what are the differences between loans? So we're going to cover some of that stuff right now. I want you guys to know, if you want the uber minuscule details, get in touch with me. We'll get you out to one of our preferred lenders. They'll give you all the ins and outs. But what I want you to pull out of today is there are a ton of great opportunities to get in with low down, even zero down type payments. So that being said, let's get on. All right, different types of loans. Here you go. Different loans have different criteria. Knowing what loan programs are available can greatly help you as a buyer in being able to make an informed decision about the type of house that you want. Timeframes for closing on loan products can vary significantly, and knowing this upfront is essential to negotiating with the seller so that way you can get your loan closed on time. Also, knowing the type of loan that you qualified for, it lets you shop with confidence. It lets you know what types of homes you can get into, what types you can't. And this is the best part, guys. When you're out shopping for a home, you know what you can get into, you know what type of loan you're working with, you know your down payment and stuff. You can fall in love with the house that you're looking at that's perfect for your family without having that the anxiety of an approval hanging over your head. So let's keep rocking. Today, Let's see. Today we're going to talk about 4 predominantly first-time homebuyer loans, okay? And we're going to talk about USDA, FHA, HUD 184, and VA loans. We use a lot of these different types of loan products for you guys, and we're going to go through just a brief snapshot of what each one of these loan products has to offer for our clients. All right, let's talk about USDA loans. This is United States Department of Agriculture, and what I'm talking about these loans, guys, we're talking about what's called a rural development loan, okay? A USDA loan can be a zero down loan program. The reason you need that pre-qualification up front is because if we need to use a USDA loan, if you want it to be a zero down loan program, as a buyer's agent, I need to know that up front so I can secure closing costs for you through the negotiation process with the seller. This is great for Gallup and the surrounding area. Guys, the USDA loan only works for towns that are up to like 25,000 people. What's beautiful about this is Gallup is under that $25,000 mark. If you're in a big market like Albuquerque, everybody always wants to move to Albuquerque or Phoenix. You know what? It's insane. They don't qualify for USDA loans. We do. It's a great benefit for a zero down product. Guys, they can do a loan up to 103% of the appraised value of the house, which means if you're buying a house for $100,000, they can go up to, and it appraises for $100,000, they can go up to $103,000 on the loan to help you out with some of your closing costs and such. Now, those are some of the pros, some of the good things about USDA loans. Let's talk about some of the negative things with USDA loans that you need to be aware of. Income limits based on family size. Understand, guys, they do have income limits. So if you're making a ton of money and you don't have any kids and it's just you and your spouse in the house, just be aware, I think it caps out at like $80,000 or something like that. So if both of you have $40,000 a year jobs, it might be an income limit. It can be a little more expensive to get into this type of loan because you have closing costs and you have funding fees that are tied into it. So understand, guys, that this is for somebody who maybe doesn't have a lot of down payment, but they're not too worried about what the monthly payment's going to be. The thing you need to understand about USDA loans is you cannot buy a manufactured home that's already in place. They will finance a new manufactured home, but they won't finance one that's already in place. So you, as the consumer, just need to be aware if you're approved on a USDA loan and we're out shopping for homes and your buyer's agent is out there showing you manufactured homes, red flag, you can't buy it with this type of loan. So who might use it? Somebody who's got little or no down payment. You have zero down, I don't care. Come talk to us about a USDA loan. Generally, USDA loans are looking for a 640 credit score. If you're not as sensitive on your payments, if it's okay if you have, $10 or $15 more, $20 more on your payment because you don't have any down payment, this loan is a great product for you, so you might want to take advantage of it. Great little topic. Guys, did you even know there was a zero down loan program out there? There it is, USDA right there for you. All right, next loan. Let's talk about it really quickly. FHA loan. It can truly be a zero down product, but you have to use Mortgage Finance Authority, New Mexico Mortgage Finance Authority, as a kicker or a secondary mortgage on this. Guys, FHA loans are ideal for first-time home buyers with very little down payment. You can actually build credit through your FHA loans as well. So sometimes people say, well, I don't have any credit. I've never used my credit. Well, FHA loans allow you to use credit on things that don't pop up in your credit report, like rental payments, utility payments, cell phone payments. We can actually build a credit file for you using a USDA loan. USDA loans qualify for manufactured homes as well as site builds, and they are a little easier on the credit qualifications than most loans. As I mentioned, guys, the FHA loan, we can actually build credit for you and your family if you don't have any. Some of the cons. Guys, you truly have to be a first-time home buyer, which means you can't have owned a home within the last 3 years. The other cons about FHA loans is conditional property, condition of the property to qualify for the loan. FHA loans are a little more fickle about what type of property you're getting into, and they can beat you up if you're looking for something that's going to be a fix and flip or something you're looking for a really good deal on. You do have a requirement on a FHA loan for private mortgage insurance. Until you get into a 20% equity position, then you need to refinance out of it. Private mortgage insurance on an FHA loan will go for the life of the loan, and that's an additional $45 to $75 a month for every $100,000 that you borrow. So if you're talking about a $200,000 loan, that could be $90 to $150 more a month you're paying on a private mortgage insurance. One of the negative things about this loan. All right, who might use an FHA loan? We're talking about people that have a small down payment. FHA loans can be gotten into for 3.5% down. So if it's a $100,000 loan, $3,500 will get you into the loan. 620 credit score, true first-time home buyers. That's who's using this type of loan. Let's jump on to our next one. All right, HUD 184 loans. Guys, these are HUD 184 loans. We've also heard this called the Native American loan, which is really, really popular in our local market, as you might imagine. So Navajo Partnership for Housing can do a HUD 184 loan where they do a second mortgage, and it can truly be a zero down loan program for you. If you're not going to use Navajo Partnership for Housing, 2.25% required down payment. So if you're on a $100,000 loan, we're talking about $2,250 to get you into your house. A couple of cons, negative things. When you use Navajo Partnership for Housing, they do have a second mortgage that they put on your house for 10% of the purchase price. So if you have $100,000 on your loan, Partnership for Housing is going to write a $10,000 loan, and then you're going to get $90,000 through a traditional lender and such like that. You need to understand that that is one of the cons, is that you have a second mortgage on your property if you're using Partnership for Housing. Must be Native American. Sorry guys, I'm a Beligana. I don't get to take advantage of the HUD 184 loan. But if you have Native American blood in you, you can take advantage of it. It's a great program for you. It does take a little longer to close the HUD 184 loans because we have a lot of times two loans that we're going through, two loan products we're going through. And if you're using Partnership for Housing, Navajo Partnership for Housing is going to ask you to take some home ownership classes. Really, really great information, but you also have to give up a Saturday sitting in 8 hours of classes. So who might use this? First-time home buyers. Great opportunity for you. Low down. Generally, guys, 2.25%, or if you're using Partnership for Housing, can be zero down. And also, guys, we see somebody who has less than a 650 credit score really taking advantage of these loan programs from the HUD 184s. A great opportunity for you. All right, let's jump on to our next one. VA loans. Guys, if you're a veteran, let me say this again, if you're a veteran, take advantage of your VA loan. Man, veterans have a great source of a home loan. VA loans, some of the pros, guys, it can be a zero down loan program with the seller contributing some closing costs. You don't have private mortgage insurance. If you guys remember a couple of slides ago, I was talking about the FHA loan, how it has a PMI. You do not have private mortgage insurance on your VA loan. And guys, you can get a lot more house for the payment. That $45 to $75 for every $100,000 that you're paying PMI for on an FHA loan. If you're a veteran, that can go towards your housing payment. That means you can get $50,000 more on your house for the same payment. I mean, that's insane. Couple of negatives, guys. You have to have been a U.S. veteran. You have to have either a medical, honorable, or a general discharge. So, it's a great opportunity for veterans. If you're not a veteran, you don't qualify for this type of loan. It does require an eligibility certificate, and it must be a primary residence. Now, let me explain that. It could be a secondary residence, but there's a very few small exceptions to it. Typically, it has to be your primary residence. So, who might use a VA loan? Veterans who served their country for 2 years or longer, who got an honorable, medical, or general discharge. Spouses, if you were married to a vet and they passed away, you as the legal spouse can qualify for a VA loan. So if you were married to a veteran and that veteran passed away for one reason or another, let's get you in here and let's talk about you being the widow of a veteran. You qualify for that VA loan too. So pretty cool information, guys. This is kind of wrapping up part 2 of our 3-part series on the Home Buyer Workshop. We're just talking about different types of loans. I hope you got some great information out of this. Guys, give us a call, 505-863-2787. 4363. We're going to get you in touch with some of the preferred lenders. Let us know what types of loan products are interesting to you, and we're going to make sure that you're getting into your house lowest down payment, lowest payments possible. Anyway, guys, it's Jason with Caldwell Banker, High Desert Realty. Tune in next week. Part 3 is coming out. We're going to talk about the due diligence process and how it protects you as a home buyer. Talk to you later. Bye-bye.